We got some massive news for SoFi stock investors that I think every SoFi stock investor should know. These relate to the company's very critical services segment revenue to offset some of the risks in the lending business. Also, we got some news regarding the company's growth in new customers, which is critical to the business's long-run success. So I'm going to share with you these latest highlights and what they could mean for SoFi stock investors. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one of the better things that came out of SoFi's 2024 third quarter earnings conference call was the management team saying that they're on pace to significantly exceed their 2024 plan and firmly on track toward the 3-year outlook we shared at the end of last year. And that's great to hear. If you're unaware of the 3-year outlook the company shared at the end of last year, the most important thing that came out of that, in my opinion, was the robust expectations for earnings per share growth. The company's management team just recently, SoFi turned profitable on the bottom line, and now they're forecasting significant growth in earnings per share over the next 3-year period. And for the management team to come out now and say that they're on track, firmly on track to hit that target, that's great to hear for SoFi stock investors. One of the concerns I had when the management team made that forecast was, are they going to be able to hit this target? Because they only recently turned profitable, and then all of a sudden they're making these optimistic forecasts on profitability over the next 3-year period. I thought maybe there's a chance they don't hit these targets because they haven't delivered sustained profitability for an extended period. But now, 3 quarters into 2024, management is reiterating that forecast and saying they're on track. So that was great to hear. The company also said that its adjusted net revenue hit a record $689 million. That was an acceleration of revenue growth to 30% compared to 22% in the second quarter. And you've heard me talk a little bit about the second derivative in rates of growth and how important that is. And here's a case and example where this company went from a 22% rate of growth to a 30% rate of growth. A 30% rate of growth by itself is impressive. But what makes it even more impressive is that comes on the back of 22% growth. So it's increasing the rate of growth. And that gives investors optimism that next quarter, it might be even more than 30%. It might be closer to 35% or whatever the number might be. But this number is rising. It's not decelerating. It could have been in the opposite direction, which raises more concerns from investors who begin to get worried that how much lower is this company's revenue going to go? So with accelerating growth, you get further confidence that this company is still fully entrenched in growth mode, and it's just a matter of what the growth rate would be. But there is certainly growth in this business. And services make up now more than a third of the company's total revenue. The segment recorded $238 million of revenue in Q3, and that was up 102% from the prior year. And this is a segment that SoFi management wants to grow faster than the lending business because the lending business is more risky and less lucrative than the services side of the business. Not unlike how Tesla is trying to become an AI business and less of an electric vehicle business. But SoFi is demonstrating a lot more success than Tesla is demonstrating. SoFi is reporting more than a third of its revenue is now services revenue, whereas Tesla might be at less than 5% of its total revenue is coming from the supervised FSD. Speculation on my part, because Tesla doesn't report that number, but it's meaningfully small in that business. Otherwise, they would be reporting it more prominently. SoFi, with further success in transitioning its business to the more lucrative side and growing 102% much faster than the business overall. And it's improving profitability. So not only is it growing revenue, but it's also helping improve profitability. It's not coming at the cost of profitability. It's actually, as they grow larger, it's becoming more profitable, even though it's not yet profitable to the extent that the business would like it to be. They also say that the tech platform grew to nearly 103 million, and that was only up 14% from the same quarter last year. This was a bit of a disappointment. Investors were hoping for faster growth in the tech platform, but this segment is more, how can I say this word, lumpy. It can come all of a sudden, the growth, when it signs a big contract or when it signs a big customer. And then it can be dormant for a while. And then again, a big customer or a couple of big customers could really push this number higher. But for sure, investors are looking for better growth from the tech platform to help facilitate that other side of the business, the non-lending side of the business, which combined, their non-lending segments grew 64% year over year and drove the company's overall growth rate of 30%, with the bulk of that coming from the services side, which increased by more than 100%. And right now, their non-lending business makes up 49% of total revenue, which is up from 39% a year ago, driving diversification of the business away from lending, which is riskier, to the other parts of the business, which are more lucrative. That's precisely what SoFi stock investors want to see. And it can partly explain why I've had SoFi stock rated as a buy all year long in 2024. And I last updated that recommendation on October 29th, reiterating that I still felt this stock was a buy. I also have done a discounted cash flow valuation model on SoFi stock, which suggested that the intrinsic value was $21.38 per share. And I did that on October 7th, 2024. Again, I have videos of each of these things on my channel. If you look on my SoFi stock playlist, you can find these videos there. But sticking with the topic of this video, the company also added 756,000 new members in Q3, which was up 35% year over year. They now have 9.4 million members. And this is the core of the company's long-term strategy, is members. This is what drives revenue. This is what drives profit, is customers joining the SoFi platform. And SoFi believes that there's substantial upside in both product growth and monetization. So it's still early days for SoFi. They're trying to do everything for everyone financially. And it's a bold and ambitious strategy. They're trying to be a one-stop shop for every financial need you might have. And so the more customers they attract now, the more these customers will generate in revenue in future years as they get acclimated with the platform, as they learn what new and other services SoFi offers. Instead of just being a customer for banking with SoFi, maybe they add a credit card, maybe they join the investing account, maybe they do other things, maybe they get their home loan from SoFi, etc., etc. So as these customers mature and use more of SoFi's platform, they will be more valuable to SoFi. The average revenue per customer will increase, and that's what SoFi is bullish about in the long term. They feel like there's substantial upside in this, and I agree with them that this is just early days. They're just now attracting customers, and over time, if they continue to serve these customers well, the customers will look to SoFi for their home loans, for their car loans, for their credit cards, for any of these financial needs they might have that SoFi offers. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.